Welcome back to AM. Wonderful to have you with us. It is 18 minutes away from 9 o'clock. There are lots of difficult decisions to be made around buying and selling a house. And it can be hard to figure out whether it's better to buy for long-term investment or renovate it quickly and flip it for a quick profit. But here to help out, here to help you get the most out of selling your house, thanks to our partners at Property Apprentice, is owner and financial advisor, Debbie Roberts. Thank you very much. That was a bit of a mouthful there. But what can you tell us what is better? Is investing better or is flipping better?
They've both got totally different roles to play. I mean, flipping can create cash, lumps of cash. You're basically replacing a job with another job. Whereas property investing creates long-term wealth and passive income.
So when you're talking about flipping, you're talking about buying a bit of a dog of a house and then renovating it and then
yeah, potentially. So there's lots of different types of flipping around. You know, the most common one that people think of is where you buy, renovate and then sell. So one of the biggest differences is GST. And a lot of people that buy a property don't, you know, if they're buying a property with the intention of selling it, they don't realise that that triggers GST. So it's all about intention at the point of purchase. Now, full disclaimer, I am not an accountant, so I always recommend that if you're looking at purchasing an investment property or flipping property, we used to call it trading. I think Inland Revenue still does. So yeah, if you're looking at doing anything like that, you need to speak to a property accountant.
What if it's your only home though? So if you buy a house, you live in it and renovate it and then sell it as your only house?
Yeah, so
if
it's your home, that's an exclusion from Brightline tax. My understanding, and you'd have to double check with your accountant like I said, but if you buy, renovate and sell your own home, you can do that, I think it's 3 times within a 2-year time, which would be exhausting.
Yeah, it would be
exhausting. Can you imagine living in a house while you're renovating it? But yeah, you could do that without triggering GST or tax on the profit.
And another thing people have got to think about is the Brightline test as well. So that's for both, essentially, if it's investing or flipping.
Yeah, well, no. Flipping actually has worse tax rules than Brightline.
Oh, really?
Yeah. And this is why I think a lot of buy and hold investors got a little bit annoyed when people were calling them speculators, because long-term investing isn't speculating. You know, buying a property with the intention of selling it, hoping that you're going to be able to sell it for more than you purchased it for, that's where most people would fall under that speculation category. So yeah, buying with the intention to sell triggers GST. Doesn't matter how long you've held that property for, it exceeds Brightline. So you can buy a property with the intention of selling it, sell it 20 years down the track, and you'll still have to pay GST on the sale price and tax on the profit.
Do you know when Brightline's coming down? Because at the moment it's what, 10 years?
Yeah, it's 10 years if it's an existing property and 5 years if it's a new build. So yeah, the coalition government's talked about reducing that time frame down to 2 years. But even then, if you purchase with the intention of selling, you know, there's no time limit on that.
I guess in terms of thinking, if you're lucky enough to be in the position where you're thinking, should I buy to invest or to flip? If you are thinking about that, I guess it depends on what you need from that, right? With what you want to create. Because if you buy to sit on something for a long time, then that's, I guess, you're not going to get the benefit of that for some time. But if you're flipping, you might potentially be able to get the benefit on a more shorter term.
Yeah, so I think the easiest way to think of it is trading property or flipping property. That creates lump sums of cash, or it can. You know, sometimes you lose money, so there's no guarantees, obviously. Trading property is a higher risk strategy. We teach both strategies at Property Apprentice, but yeah, trading is a higher risk strategy. So yeah, trading creates lump sums of cash if you're lucky and if you do it well. Long-term buy and hold creates wealth and passive income.
I've got so many more questions, but if you've got plenty more questions as well, go and check out Property Apprentice. Thank you very much, Debbie, for coming in and talking to us today.
That was thanks to our partners, Property Apprentice.